When most other apartment markets in the country were still ailing in 2009 and 2010, El Paso was thriving. And now that most other apartment markets in the country are thriving, El Paso is trying to rediscover its momentum. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your El Paso update. We've told the story often, and it's worth repeating, at least in brief. When the national recession hit in 2008, the effect in the national apartment market was pretty severe across most metros. But through those years, one market that consistently stood above the pack was El Paso. It never posted even a single quarter of year-on-year rent loss all throughout the downturn, and was among the few spots anywhere in the country to actually post year-over-year occupancy gains in 2009. And when 2010 rolled around, the best of the non-El Paso market started to show strong demand again, but rent growth remained elusive. But in El Paso, rent growth surged to double-digit levels as occupancy popped up above 97%. And those days have long since passed, and El Paso has gone from a top performer now to a bottom performer. Now let's take a look at the stats. Occupancy has cooled down to just 92.5%, more than 500 basis points below the 2010 peak. Every submarket and every product agent segment has failed to reach 95% or better as of Q1. On pricing, El Paso has now posted 5 consecutive quarters with negative year-on-year rent change. No other market nationally has such a streak ongoing. As of Q1, rents were down 0.5% year over year. So what's happened? Well, a couple of things. First of all, construction really surged up in response to the big demand and rent growth seen in 2010. You can see that in this chart here. Apartment construction hit 15-year highs in 2010, and aside from a brief reprieve, we've seen construction generally stay at those elevated levels. And so the apartment base here has grown by 5% since 2010, and another 1,200 units or so are still underway, and that's proven to outpace demand. The other part of the story is that job growth has slowed. A big part of El Paso's surge from 2009-2011 was driven by the rapid expansion at Fort Bliss. The military spending makes up about 16% of the economic output in El Paso, so that was a big deal, made a big dent in what was occurring in the economy. But after that project completed, job growth cooled, and that slowed housing demand. So all that being said, El Paso is a market that has seen some unusual factors at play in recent years, and we've seen the good side of that and the bad side of that more recently. And going forward, we think we're going to start to see some normalization. Now, supply should be a big factor, a big headwind in the short term, but after that, we should see supply start to drop off and fundamentals level off, and we think occupancy should stabilize around 94%, and rent growth should be steady but unspectacular. And that wraps up for El Paso. And so until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.